welcome to this market update by Vagabond Investors. Let's look at the market and make some observations. The US bond market seems to have lost confidence in inflation figures published by the Bureau of Labor Statistics. The 30-year fixed-rate mortgages are above 6.3% at the moment, despite the fact that the Fed funds rate is at 2%. It seems that the Fed has lost control over long-term interest rates. If the Fed keeps its rate low long enough, inflation will rise once again, and that of course is bad news for the dollar. I think it's very, very difficult for the Fed to actually bring down long-term rates, but I think they stand the best chance on doing that. The best chance to do that would be to actually raise Fed funds rate. But hey, what are the chances of that actually happening now that the money printers are at the Fed? And with the government willing to bail out homeowners and further boost the fiscal deficit. Well, let's make some investment considerations then. We think that the dollar has upside potential from its currently oversold position for 4 reasons. Number 1 is the long-term interest rates have risen, and this of course is supportive for the US dollar. Number 2, I contend that the United States is already in a recession, and the euro area may be in a trouble soon enough. Despite the fact that the ECB raised its interest rate from 4% to 4.25% today, I think the ECB may be forced to cut down rates once the trouble starts to hit continental Europe, and euro would seem to have downside potential from its current level. Number 3 is that high oil prices have curtailed demand. Commodities markets have become very volatile. There are price fluctuations and prices are going up and down. And if you look at wet, lead, nickel and zinc, they have already experienced 50% corrections from their peaks. So I would not be surprised to see a violent correction of oil prices. And since oil and dollar move into opposite directions, lower oil prices would naturally be supportive for the US dollar. Number 4, poor performance of emerging stock markets. I think they will drive money to US stock markets, and this of course will be supportive for the US dollar. Now, with these considerations in mind, please be careful, especially if you think about shorting euro against the US dollar. Please use very, very tight stop-loss orders on that, and please do not short oil at all. This is because under the current US administration there is a possibility of an Iran strike, so do not short oil at all in this environment. What about financial stocks? You hear many financial advisors recommend you to buy financial stocks at the moment, and I don't think that is the kind of bet that I would be willing to make. I have no doubt that the financial sector will rebound, but from which level and with what upside potential? First of all, the bank index has broken an important support level, and it has now become the new current resistance level in the context of a rebound. And secondly, banks have exposure to residential and commercial real estate that equals 12 times their equity. So a quick recovery for financial sector is very, very unlikely in this environment. And finally, for the reasons we have already touched on part 1 of this post on changes in investment environment for the next few months, is that we think that the US and Japanese stock markets will outperform emerging economies, though eventually the weakness of financial stocks will spread to the entire stock market, and this of course includes material and commodity related stocks. I think that the deleveraging process is likely to bring about a global economic slump, but hey, that's the good news. That's the very good news, because huge transfers of wealth are made on these shifts, and I know it requires more skill to invest profitably in a down market than it does in an up market, but hey, that's where all the fun is in this game of money. So I'll see you guys next time on these Vagabond Investors market comments, and please visit our website at www.vagabondinvestors.com. Until next time, successful investing.